Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is Tuesday, November 12th. Yeah, already almost halfway through the month. We are going to take a look at one out of the material sector, Mosaic. Now, before we get into the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Hit the subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever we put out any new content. I do this Stock Pick of the Day video series Monday through Thursday whenever the market's open. And if you'd like to buy me a cup of coffee, go ahead and hit that thanks button down below. There's several tiers down there you could donate to my coffee fund. Thank you. And a special thank to all the subscribers. The channel continues to grow because of people like you. Now, this is the Vested Interest Stock Screener. This is how we are going to be going through today's video. At the end, we will see if it stacks up. Must meet 5 of 8 to make it onto my watch list. If it's a financial company like a bank, which this one is not, we would add in price to book, and then it's 6 of 9. Now, back to Mosaic. Check them out on their homepage where I pulled this information from. Mosaic Company or mosaicco.com. That's mosaicco.com. That is their homepage where I pull this information from. And you can see here, I like maps. So there's a map here that shows you where all their different locations are, where they mine for potash, phosphate, where their distribution centers are, joint ventures, where they're working with other mines or companies, their office locations, and biosciences labs as well. So our business, a global leader in the crop nutrient industry, Mosaic mines, produces, and distributes millions of tons of high-quality potash and phosphates products each year. Without fertilizers, and that's what they're providing, right? Fertilizers, the world's crop yields would be cut in half, and farmers around the world look to Mosaic to help keep their soils healthy, to nourish their crops, and to maximize their yields. We are committed to meeting these needs responsibly and sustainably with deep respect for the land and genuine concern for those who depend on its output. So Mosaic is providing the fertilizers that companies, our farming community out there needs, whether you're a, home farm, small farm, or a larger business farm. Now, the reason we're taking a look at them, down 7.78% on the day. Big drop on the day. Did close out the day at $25.85. We are talking about the Mosaic Company, ticker MOS, out of the material sector. 52-week range as low as $24.12, as high as $38.30. So they are right up against their 52-week low here, about a little over $1.80 off of their 52-week low, but pretty doggone close, definitely within 15%. Market cap of $8.237 billion. So they are a small cap company here. Beta of 1.36. They are more volatile than the overall market. May be able to use that volatility to your advantage. You'd be buying them on the lows and then riding them up on the highs. PE seems a little high for a company like this, $34.47 per share. Price to earnings seems a little high. That's more in line with what you'd see with like a Microsoft or Apple or IT company like that. Earnings per share, 75 cents per share. Earnings date November 12th, so it was today. I would estimate something in their earnings, whether it was top or bottom line or their future projections were off. So I'd go check that out if you're interested in this company. See what they reported out that had them drop 7.78%, though they are up a little bit in the after hours, 1.1, at least whenever I pull this information, they were up slightly. But overall, big drop on the day nonetheless. Forward dividend is 84 cents. They are a quarterly payer, I believe. We'll see that here in a little bit. Yield is nice, 3% starting dividend yield. Ex-dividend date, September 5th. So you would not be in line for that dividend. They paid it out here way back in September 19th. So there should be another one coming up here in December. One-year target, at least according to the Yahoo Finance, where I pulled this information from, $33.10 is what they see. So they do see some upside from here, but not quite getting back to that 52-week high. Jumping over to the right here, I like to look at their 5-year dividend yield average and compare it to their current. We're looking at dividend yield theory here. That theory says whether or not a company is potentially overvalued or undervalued. And to do that, we look at their 5-year dividend yield average, 1.4%. We compare it to their current 3%, or over here where it says forward 3%, same number. And since it is higher than their 5-year average, that speaks to undervaluation on this one, potential undervaluation, at least according to dividend yield theory. Payout ratio is very elevated. I don't like to see anything over 75% typically, unless it's like a REIT or something that has to pay out 90% or more. But this payout ratio is way too high for me, 109.33%. That's scary to me. AbbVie was in the 200%. And again, a company from time to time might jump up or down, fluctuate a little bit, but it can't be sustaining over 100% because then they're going to have to do something to maintain this, whether they're pulling funds out of savings, whether they're issuing more shares, whether they're diluting you as a shareholder. They've got to do something to be able to maintain a above 100% payout ratio because their free cash flow just simply isn't covering it. So I like the 75% or under. This one's too high for me. Now, speaking of free cash flow, I like growing free cash flow over time because typically if a company has growing free cash flow, they have growing dividends to match. Going back here to December 2021, $894 million in free cash flow. 2022 up to $2.6 billion. That's a huge jump. 2023 was back down though to $1 billion. And then the trailing 12 months, it looks like it's even down further. So it's definitely been declining for the last several years to $465 million. Now they are repurchasing their own shares as well. $410 million back here in 2021. 2022, along with that jump in free cash flow, they repurchased a huge tranche at $1.6 billion. Down in 2023, $756 million. And again, down the trailing 12 months, $460 million. Definitely see a downtrend since 2022 here. Now, stock analysis is another source that I like to go to for information. Yahoo Finance was the previous page. I recommend more than one source, at least two, if not three, so you can make sure the information you are getting is accurate and up to date. It's a way to back check different sources and make sure they're providing the same information. Now, stockanalysis.com, the most recent update was October 11th for this information. So this is already a month in the past, right? This is already outdated by a month based on their last update here. So that's why I recommend more than one source, right? These aren't always updated daily. Some might be, others might not be. This one was not updated since October 11th, but they do have 8 analysts that took a look at this about a month ago. They called it a consensus buy at the time. They had a low estimate of $27. It currently sits lower than their lowest estimate and would represent a 4.45% increase if it came back up to the $27 low that they estimated. Average estimate of $32.38 would represent a 25.26% increase from where it currently sits. High estimate of $48, that would represent an 85.69% increase from where it currently sits. All the while, you could collect that 3% dividend as long as they maintain it. Again, that payout yield or the payout 100% over 100% is too high for me, but maybe they're doing something that I just don't understand. Now, I like to look at the statistics and look at return on equity and return on invested capital to see how well a company is reinvesting back into itself. I like 10% or better for both of these metrics. Return on equity is very low in my opinion, 3.35%, and return on invested capital, ROIC, is a 2.89%, both under the 10% target that I'm looking for. Earnings per share growth, EPS, I'm looking for 5% growth or better over the next 5 years. They're sitting at 6.6%, so that beats the 5% I'm looking for there. Revenue growth is a little slow at 1.09%, but it is forecasted to grow over the next 5 years as well. Now, taking a look at their dividend history, quarterly payer, like we thought, payout ratio, again, elevated, 111.61%. Yahoo Finance had it around 109. Either way, over 100% is a no-no. This cannot be maintained for very long. Something you'd want to be keeping an eye on if you're interested in this company. They're saying they're growing the dividend by 10.67%, which is nice, double-digit dividend growth, but should they be if the payout ratio is so high? 5 years of dividend growth, buyback yield is positive at 4.37%. Shareholder yield is positive at 7.62%. They do pay out on the March, June, September, December timeframe like most companies do. And again, they should have one coming up. They paid out the one in September, but they should have one coming up. They report out in October typically and pay out in December. So it was strange that they didn't have some. They may have already cut the dividend. Might want to look at that too. If they don't release something soon, I guess maybe they did cut the dividend. I don't know. They should have reported it out in October, but the last one we saw was in September. So we'll see. But going back in time, June 2022 here, 15 cents in dividends. March 2023, they raised it up to 20 cents. Most recent was March 2024, up to 21 cents. And if they're going to maintain that, I would anticipate in March 2025 they do again, but I'm still waiting to see if they even pay out this December one because we didn't see it on the Yahoo Finance page, but I'll have to look more into that one. All right, let's check out the screener, vested interest stock screener, see how this one stands out, or whether it stands out. Understand the business, check there. Yep, growing free cash flow, no check. Growing dividend, yes, but I'm questioning whether they should be. growing their dividend at a double-digit rate if they're over 100% payout ratio. Dividend payout ratio is over 75%, so no check there. Dividend yield theory says it's potentially undervalued, so check there. It is within 15% of a 52-week low, so check there. Return on invested capital and return on equity were both under the 10% I'm looking for, but their earnings per share growth was forecasted over at 5% at a little over 6%, so check there. So we're looking at 1, 2, 3, 4, 5. It just sneaks onto my watch list. I actually believe this company has been on my watch list for a while, but I picked Nutrien over it. Now I'd have to go back and look at Nutrien because Nutrien is another one that's really pulled back. It's in a similar vein as Mosaic. Let me know what you think in the comment section down below. Do you invest in Mosaic? Maybe you're a Nutrien investor, or maybe you're avoiding both altogether. Let me know. I'd love to hear from you. Well, that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Click that notification bell so you're notified whenever we put out any new content. And drop a comment down below. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Mosaic you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below. I'll try to work it into the rotation on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. And we'll see you next time. Thanks for stopping by. Hope you have a great week. Oh, and just a quick heads up. This will be the last video for the week. I am going on vacation. I'm going up to hunting camp with some buddies of mine. So hope you all have a great week. I will be back on Sunday for the portfolio update. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. And you can read the rest of this, but I am not a financial advisor.